Today, we will understand gold's all-time high and Indian market correction signals. Hello, everyone. This is Shilpa Raidas, and welcome to Midweek with Indiacharts. And we welcome you, Jay.
Hi, how are you doing?
I'm doing very good, Jay. How are you doing?
All good, thanks.
Wonderful. Jay, we are all excited to hear your analysis this midweek. So I'll quickly begin with my first question. What we have seen is that the CPI data was slightly above expectation, but the US indices gave a strong closing. And what's happening there right now, Jay, we would like to know. Also, the gold has made a new all-time high and silver has also rallied, right? So what's the outlook on the precious metals and the dollar index, Jay?
So firstly, when we look at the CPI data yesterday, yes, there was a marginal miss on the expectation. Okay, so it had come slightly above expectation. So I think market is now more or less not nervous about it. That is because, Fed has clearly stated in a statement, even in between, Fed had come and he had spoken. So he said that, we are comfortable with what data we are getting. It's just that we need to get a little more confidence to start thinking of a rate cut. Okay. So I think maybe that is the reason why the market is, not so jittery about it. But I think, see, there is one risk involved over here, and that is what we need to see because see, next week Fed is going. There will be this Fed meet. Okay, so there Fed is going to give a clear path. As
Right.
to how he's looking at till the year end, how many rate cuts are they thinking about? Those all things will be clarified, in the coming week. I think only one negative surprise that we can possibly get is that, right now market is somewhere anticipating around 4 cuts or 5 cuts, somewhere around that is the expectation. But if the Fed comes and they say, okay, it is 2 cuts, or they are going to keep the rates higher for longer, and maybe towards the end of the year, if they cut the rates, so that is the risk that is there. Because if you hear the Fed commentary very carefully, time and again they have said that we are okay holding the rates for a higher for longer, but we don't want to prematurely cut the rates. Okay, because Fed Powell has said very clearly that the risk of cutting rates early. If we do that, then inflation will bounce back very sharply, and then again they will have to take extreme measures to get it under control. Okay. Rather, what they would do is that they will keep the rates higher for longer until and unless they are very sure of inflation coming down. And if the second scenario comes, okay, into play, then there is a risk of US economy, considerably slowing down because of the higher rates, right? So that is one of the risks that I can see in the horizon. Okay, given how the way the data is playing out, because Fed is looking at core CP very closely, and there was a month-on-month slight inch up. It had inched a little higher month-on-month. Okay, so it was, I think, somewhere around 2.50, 2.49 or so. It had inched slightly higher. So, but basically that is at a very good level. Okay, on the downside for Fed to be little comfortable. So that's why you see the tone from Fed that, they are confident of inflation going back towards the 2% mark, which is their goal, right? Now, coming to the US indices, I think that they are at a very, crucial point. One, because when we look at the, setup over there, so this is something that we had already highlighted earlier, that S&P 500 is at the upper end over here, okay, of
Yeah.
this entire broadening pattern which is there. And see, what happens is that if you see over here, this ratio, when it started inching higher, okay, that's where S&P made a top over here. And so similar, this is the volume put call ratio that we are seeing. Okay. So if this ratio, is bouncing back from the lows, then, typically markets have corrected. And if this ratio is at the highest point, say like over here, okay, that is actually the bottom for the market. Okay. So now in the recent times, you can see that this ratio has started to inch higher, right? But so far we have not seen a correction in the S&P index. So this is the divergence that we are seeing. Okay. So this means that either this volume put call ratio will again come down. Okay. Or if this keeps rising, then eventually the S&P 500 will fall on the downside.
Yes.
Okay. So that is how things are poised at this point of time. And also, if we look at the normal, if we look at the technical setup of S&P 500, so it is very, we are seeing a long divergence over there. So wait, yeah. So this is the RMI that you can see at the top, right? So what is happening is that the S&P index is taking support at the 20-day average and it is inching higher. Okay. And what it is leading to is multiple negative divergence, something very similar that we had seen in the mid cap index as well. And with today's decline, how things have ended, right?
Right.
So that's how eventually, this divergence will play out on the negative side. Okay. All we have to do is that wait for the 20-day to break on the downside. And if we go by the volume put call analysis, which I showed you just a while back, it is hinting towards a correction, right? So that is how we are poised on the US index, and more or less, every index over there has the same setup. Now, when we look at the dollar index, that is very interesting because dollar index has seen a 61.8% retracement of this decline. Okay. And so far, we don't have any conclusive evidence yet. So we don't know whether this decline is ABC or 1, 2, 3, 4, 5. Okay. For that, we would want to see whether the dollar index overlaps the previous low, which is at, I think, 103.43, or does it make a newer low without overlapping? If it makes a newer low without overlapping, then we may have a 5-wave decline from the top, okay, which would mean that directionally it should go down. But if this decline ends up being 3-wave, okay, and then the channel breaks on the upside, then the risk of dollar index rising to 108, that risk sort of opens up. And if the dollar index rises higher, then it may not necessarily be positive for the equity markets, okay, because that would tell you that there is risk of trade that is taking place, and people are moving out their money from equities to safe haven. Okay. So that is where dollar index is. Now, I think the movement of dollar index will sort of help us understand how gold and silver would be poised. Because if you remember, in the last discussion, when gold was somewhere around this point, we had mentioned that there is a possibility that gold rises higher towards this resistance line, which was around 2170. Gold has done that, and now whether this is a falling wedge, okay, or this is going to translate into much bigger up move. So that is something that we will get to know. We'll get some hint from the dollar index, and obviously, later we'll see how gold is unfolding. The movement in the gold is unfolding. If it breaks above this trend line significantly and it starts sustaining above this trend line, then that is a sign that we are probably poised for a bigger up move. So we don't have an exact answer at this point of time. We need to wait and watch. But when we look at silver, there seems to be some more room on the upside for it to move towards the upper end of this entire consolidation, which is, say, somewhere around 26 or so, right? So that is how I think gold, silver, and dollar index are poised. So in dollar index, we need to wait and watch, whether we get a 5-wave decline or it overlaps and the decline becomes 3-wave. So once we get that clue, probably then, we'll have a better understanding as to how the future path could be.
Okay, that was very well explained, Jay. Thank you so much for that. It gave us a lot of clarity. Jay, I would like to move on to my next question now, which is seeing today the Indian indices, we have witnessed a sharp sell-off, and the divergence between the small cap and the mid cap and the Nifty index has played on the downside, right? Is this
Right.
correction over, or can we see more correction, Jay? And what are the data points on strike telling us right now?
Right. So firstly, I mean, we had this highlighted multiple times that the Nifty, the mid cap index and all, they had peaked
Yes.
out somewhere in the month of early Feb only. Okay. But it was Nifty index which kept rising higher, and it
Right.
topped out only in the month of March. So we had this intermarket divergence, and one of them was wrong. Okay. Which means either mid cap index will catch up on the upside or Nifty index will fall. Now, what is happening is that Nifty index has fallen, and because mid cap was already weaker, that is falling even more. Okay. So now, everyone is interested to know what is the what next now, right? So ideally, what we would think is that, I mean, the correction has been brutal in past couple of days, and basically, what we are seeing is uh, the benchmark index might look like that, they would have corrected just 6, 7, 10% or so, but beneath the surface there has been a lot of correction that has happened, and I'll come to the breadth analysis in a while. But broadly what we are looking at is that when we had discussed this earlier, that the weekly RMI cycle is in bearish mode. Okay. So ideally, what we would want to see is it coming back towards the zero line. And then after, when there is a next buy signal, that will be the watching point. Whether, is the correction complete and are we moving higher or no? But I think this is where our proprietary indicator, that is RMI, will come very handy to people, because RMI will allow you to wait patiently, until we come back towards the zero line. All this while, we have been mentioning that we would like to see weekly cycles getting complete. Weekly cycles getting complete means RMI turning bullish and then, again coming back towards the zero line. So that is like one cycle that we see, right? We would want this to come back towards the zero line. That's where we will say that at least one leg of something is over. Okay. Now,
Right.
after that, do we get a major pullback or a new up move? That is something that we'll figure out once that happens. But if you see the small cap index, that is now, leading on the downside. I mean, over here, you can see that the 20 week has been broken decisively, right? So ideally, what I would think is that small mid caps may hit they would eventually hit the 40-week exponential average and they would complete the cycle. Okay. So until that doesn't happen, we have to be patient. Okay. And not try to bottom fish over here. Okay. Similar goes to the mid cap index as well. Mid cap index is at the 20-week, but I think eventually it should break on the downside, and we should see this cycle completing. Okay. Now, similar thing, if we see it in Nifty index, it is still at a very early stage over here. I mean, we haven't seen that sort of correction as we have seen in small and the mid cap index. So now many of the people want to know the question of whether we should buy this dip or no, right?
Okay.
But I think the answer is to be a little patient. The reason we had pointed out this multiple times, that the weekly RMI in all the indices, all the key indices, they had gone in sell mode, right? All we were waiting for was break of the daily averages, which was the 20-day and the 40-day. Okay. So 40-day is nothing but the blue line. So you can see that, in this entire up move that we had seen in the small cap index, the blue line was holding, right? The moment the blue line broke over here, okay, which was accompanied by a trend line breakdown as well. Okay. Some people also call it as an head and shoulders pattern. So once this broke on the downside, we saw a very sharp decline, right? Now, what we would ideally want to see is cycles getting complete. So what do we mean by cycles getting complete is, if we get a bullish crossover below zero line, we would ideally want this cycle to again come back towards the zero line. So that is where we can say that one up move and a pullback is possibly complete. Later on, we can either get a meaningful retracement, or probably a new leg of up move. So whether we end up getting a meaningful retracement and a decline or a new up move is something we'll figure out as and when it happens. But at least for now, what we would expect is that this cycle to get complete. Okay, and after that we'll have a relook, because see, the small cap index has broken the 20-week average. Okay, now this opens up the downside level up to the 40-week or even the lower weekly band as well. Now this obviously would be a dynamic level which will keep shifting higher. This similar thing I think should happen with the mid cap index as well, where it is at the 20 average. I think if that breaks on a closing basis, then we are possibly looking at a downside up to the 40-week exponential average. And if that happens, I think in that process, it should end up completing the cycle on the downside. Now why I'm stressing that the blue line is very important is because when we look at the mid cap index, okay, even mid cap index was holding this blue line until yesterday. Okay, yesterday also it closed at the blue line, and today it broke the blue line and it was sustaining below it, and today we have seen a massive decline. Now Nifty is somewhere around that spot. Okay, see, in Nifty we have had multiple confirmations like a wedge breakdown. So people who don't know what is rising wedge, so rising wedge is like a distribution pattern. Once it breaks on the downside, it usually leads to a trend reversal, and it would mean that the rise from 18,800 that we have seen, that is from this low to this high, would be complete, and we would be staring at a retracement of this entire move. Okay, but what we would want to see is the blue line breaking on the downside, that is the 40-day exponential average. Because like I told you, I mean, if we see the mid cap index, blue line was holding. Once it broke, we saw a sharp decline. This is where the Nifty index is right now. If the blue line breaks on the downside, that's where we might end up getting a deeper correction. And eventually what I would expect is the weekly cycles to get complete. Okay, that means that it will come back towards the zero line, and that would be the comfort point. And then we have to start thinking, if the new leg is starting or no. But I think until then, we would be patient and we would be on the sidelines and watch carefully. Now, when we look at the breadth indicators, okay, now one has to understand it from a short-term perspective, what is happening, from a medium-term perspective, what is happening, and from a long-term perspective, what is happening. That context needs to be kept in mind. Okay. So when we look at something called a swing, this works very well for a short term. By short term, I would mean 1 day to 5 day kind of thing. Okay? So typically when we see the daily swing coming back towards the second orange line, or if it goes in single digit, and if we get a positive daily close from there, there is a chance that we can get a pullback in the near term. Okay, I mean, that would at least mean that the near term correction is complete and we can get a pullback. If you see over here, there were multiple times when it got to that oversold zone, there has been pullback from time to time. Okay, and this is how it will behave, and it will keep going, I mean, zigzagging. So daily swing will be very helpful to catch the near-term tops and bottoms, right? Now, when we look at the breadth from a medium-term perspective, I mean, the 20-day average is the short-term, or you can say a little positional one. Like it will work very well from few months perspective. So that, if you see, I mean, if it comes back towards the second orange line, which so far it has not done. I mean, today's data needs to be updated and we need to see where the value is. But if it comes towards this second orange line, that's when there is a scope of a pullback. Because as you can see over here, that when it reached over here, I mean, we saw a meaningful pullback, right? When we saw over here, I mean, this was a positive divergence that we could see. But after that there was a big up move. Again over here, it came back between 1 and 2 line, and then we saw this bigger up move, right? So, so we will get those phases. And when this line comes towards the second orange line, that will be the time where possibly a deeper pullback can happen. Okay, will it be a deeper pullback or a next leg of up move? That we'll get to know only that point of time. Okay, now again, if we look at the 40-day average, even that has been dipping. Okay, so 40-day dipping towards the second orange line and blue, and this 20-day average also at the second blue line. These are sort of indicators that we are getting into that oversold zone, and we have to be careful not to be too bearish, because there could be a meaningful bounce that can come. Okay,
Right.
but when we look at a little medium term kind of indicator, okay, which is the future index by OI, and this we have discussed in length in the past. All this is telling is that there is a lot of speculation that is happening, right? And usually such speculation has led to a medium to long term top as well. I mean, medium term top as in 1 to 2 years kind of top it has made, or in fact even more. So it was only at this point when the Nifty was diverging, and if you see the small cap index and the mid cap index, they were falling once this top was made. Again, this ratio has come back towards the 1700 mark, just for the newcomers, for their benefit. I'm just showing that even in 2008, this ratio had reached towards this 1700 mark. And from there, the Lehman crisis and all happened. We saw a massive correction. Okay, over here, COVID was the reason due to which we saw a massive correction. I mean, can there be any black swan event and that can lead to a massive correction? I mean, that is something that we cannot predict right from the start. I mean, right now, but what we know is that speculation is happening a lot. Okay, and when there is a lot of speculation, normally it doesn't end well, which means that this ratio has a long way to go on the downside. And if that happens, this can actually lead to a meaningful correction from a medium to long term perspective. Okay, like say from 6 months to 12 months perspective, there can be a meaningful correction that can be expected. Now, in this bigger correction, what we have to do is that we have to try to navigate the ups and downs, right? And those ups and downs, you can navigate it through the market breadth that, okay. Also, we have something called as diffusion indicator. That is basically we gauge like what are the percentage of stock about 20 average for all the baskets. I mean, if you see for small cap index, the reading is now 2. That means only 2% of the small cap index, okay, is above the 20-day average. Okay, if this is a basket of 100, that means only 2 stocks are above 20-day average. I mean, it is that oversold. So normally, when we see those swing going to single digits, the daily swing, which I mentioned, then when you see these sort of short-term diffusion indicators that going to extremely oversold zones, we do get a pullback, within 1, 2, or 3 days at the max. Okay, I think so. A pullback could be due and could be around the corner. So we just need to wait for the reversal. Even if we see the percentage of stock with RMI buy, even that has gone towards the low single digit, that is 4%. Okay. So these sort of readings indicate the very oversold zone, like you see over here as well. I mean, we saw a pause or a minor pullback. So, whether we get a meaningful pullback or a pause is something that we don't know, but maybe in the near term, a larger part of the correction is complete. Okay. And from here on, maybe being very bearish on the small cap index specifically may not be a good idea. But when you look at the percentage of stock for the Nifty index, it is still around 22. Okay. So this has still some legs on the downside to go. So it can happen that the large cap index haven't seen a correction, and maybe over there we now end up seeing a correction. And that goes to the idea to whether the 40-day holds or not. Okay, if it doesn't hold on the downside, then we have to brace ourselves for a correction. And I think the level that we would be watching out on the downside will be somewhere around 21,000. because that's where a lot of bottoms have occurred in the past, right? So that would be then the downside level to watch out for once the blue line, that is the 40-day exponential, breaks on the downside. And also we have something called as new periodic high. I mean, so this is net new. What it means is that if this reading is going on the, I mean, if this reading is going in red, it means that now there are stocks which are hitting net new lows. I mean, when we subtract the net high and net low, if it goes in negative, that means more stocks are hitting 1 month low. So in Nifty 50, you might not see red right now. Okay. But when we look at small cap index, I mean, there has been a massive correction over there. Okay. And you can see that the red line is now, meaningfully down. Similar thing for the total market as well. Okay. Similar thing for mid cap as well. I mean, these all have turned in red. Nifty is the one where we haven't seen it going in red. Okay. So when it goes in red, I think that's where the correction will, sort of accelerate on the downside. But again, I mean, all these things are telling you that while the Nifty index was making a new high, okay, the breath was, cooling off significantly. And it always so happens that, once if the momentum starts, I mean, the momentum on the upside starts losing, that's where the possibility of a decline comes. Okay, because I mean, it is always a slowing process, and then there is a fall. Now we are getting into that stage jahan pe, this distribution is possibly done, and we can end up seeing a correction. Now, how big the correction will be is something that is, difficult to anticipate at this point of time. I mean, whether will it be a smaller correction or a larger one? The reason why I say that is because, I mean, if you go by the wave counts, then we can actually come from the 2020 low to this high as one entire leg. If that is the case, then, we are staring at some 15,000 sort of levels. Now, whether will it come or no is something that we need to see. Okay. But all what I'm trying to say is that we are at such a point where we have to be very careful, because if things get ugly, okay, things can get very worst then. I mean, it might be, I mean, the correction could be beyond what people would expect. So the whole question is that, are you prepared for that? Right? So that is what it boils down to. So I think risk management, I mean, booking out profits from your long-term holdings, especially where you're seeing, weekly or monthly averages getting broken, those are all the action point that you might probably want to take and be a little more active now. Because like I told you, we are at that point where there is a risk of a significant correction. Okay, whether it happens or not is something that we will figure out as and when things unfold. But yes, we are at that point where we have to be careful. And this is not a time basically to bottom fish and play for that 4-5% kind of move. Because if this turns out to be a significant top, which so far it is looking like, looking at the chart. So, I mean, things can get really ugly from here, and that's where we need to be very cautious. Okay. So that is the broader point. If, say, the sentiment in the sentiment indicators goes to extreme oversold zones and all, okay, that is the time that we will punt over there. Okay. And we will try to think whether the long-term bottom is being made or no. But surely those all indicators are not suggesting at this point of time. Surely in the short term, things might have got oversold. So there is a case of some pullback or a sideways consolidation. But I think that's about it, what we can expect. I think 15 days or 1 month from here on, we could possibly be heading little lower than heading higher. Okay. So the trajectory is on the downside. That's what all the technical indicators are suggesting us. So we need to be a little careful from here on.
Okay, that was very insightful, Jay. Thank you so much for that. We got a lot of clarity. As you all can see, Jay helped us analyze better with the help of diffusion indicators on strike in much details today. Strike is, of course, the best. We have got various indicators with historical data and very unique features. Jay explained us with the help of it today. As you see, we could analyze very insightful and comprehensively. You wouldn't know yourself if you wouldn't try it. So that's why Strike offers a 7-day free trial. Okay. So I'm going to leave a link down on the description where you can get a 7-day free trial with Strike. Go on there, sign up right away. And also follow Strike on Twitter and YouTube, because that is where you get to know all the unique features of Strike. Yeah, we make videos where we help you analyze better through Strike. Okay, so I encourage you to join the channel right away as well. While you're at Indiacharts, we are very thankful that you guys support us with our midweek weekly videos. And I encourage you guys to ask questions in the comments so that Jay himself is going to answer them and help you, analyze better if you have got any confusion, any questions for the future. That was a lovely session, Jay. Thank you so much for that. I'm very excited already for the next week, midweek. So take care of yourself. Yeah. Thank you so much. Bye-bye.